Real estate prices in this country are like one of those Rorschach tests. Are falling home prices a mild, much-needed correction or an imminent sign that the end is finally nigh? Well, we have fodder for both camps tonight. The Canadian Real Estate Association says we've just seen the first yearly decline in home prices since 2013. That 0.3% drop brings the average price of a home to more than $478,000. That's mostly due to fewer sales in Toronto as well as Vancouver. If you stripped out those two markets, the average price is more than $381,000, up from $365,000 a year ago. Nationally, sales fell 2.1% compared to June, the fourth straight monthly decline, and 12% compared to a year ago. On the surface, rule changes by the province aimed at cooling the market helped make Ontario's Greater Golden Horseshoe area the biggest contributor. Craig Alexander is Senior Vice President and Chief Economist at the Conference Board of Canada. So, Craig, we have this weird dichotomy where the economy is doing better, the housing market's beginning to sort of come down a little bit. Is this simply just those policy levers that were pulled by the Ontario provincial government beginning to have their effect?
Well, the peak in sales was in March, and in April, the Ontario government announced that it was taking actions to try and cool the market, and it announced a non-resident buying tax and also some additional other measures, which I actually think have caused a significant psychological impact in the Greater Golden Horseshoe area. We also had a Bank of Canada hike, which led people to wonder, how high interest rates ultimately will go, and maybe we've seen the lows in interest rates. I would say that the market reaction is a little overdone. I think that given how much non-resident buying of real estate there is in Ontario, you shouldn't have seen the sort of reaction the market's had. So I do think a lot of this reaction is psychological, and it's similar to what we saw in Vancouver when they put in a foreign buying tax. It took about 6 months for the market to adjust, and then the market started to stabilize and then start to recover.
You've previously been in the soft landing, not major correction camp. What do these numbers do to where you stand on that now?
Well, what I can see in terms of the behavior in the market is, first of all, the price sales are down, but so are listings. And if you look at the inventory of homes on the market, where in the Greater Golden Horseshoe area or in Toronto, you're looking at just under 3 months of inventory. That's a little under the long-term average. So basically, supply has tightened up at the same time demand's pulled back. So from an economics point of view, I think that you're seeing that the correction is running its course. I don't think it's going to continue indefinitely. And in fact, the decline in sales is diminishing with time. So again, I think that there was a big reaction to the government's announcements, and that caused a lot of sellers and buyers to leave the marketplace. But I don't think that this is going to cause a sustained or significant price correction, partly because the economy actually is doing quite well. And I think that the Ontario economy is still going to be delivering solid growth. It's going to be creating jobs. Unemployment's going to be low. So a lot of the fundamentals for real estate are going to be good. But people are not as bullish about real estate as they were before the government took action.
And yet, as you say, those rising prices over the last, 10, 15 years have been slowly pricing people out every year as those prices get just a little bit out of reach for them. As they drop back down, is it natural to assume that a lot of those people will try to find a way back into the market if it comes back down to a level that does, if they do the math and it makes sense for them to get back in, we'll see them try to get back into the market and buy?
Well, the population of Southern Ontario is rising. Immigration is driving demand for real estate in Toronto higher. The fundamentals for the economy are good in terms of incomes, in terms of job creation. I mean, all these things are supportive to real estate. And so let's imagine a world where the correction actually has somewhere to run. Like, let's imagine we continue to see it weaken and prices do, in fact, decline more. Well, that ultimately will improve affordability and buyers will be brought back into the marketplace. So, I think that the economics of this is playing out in a relatively sensible way. I don't think you're going to see a huge decline in prices. The other thing I'd stress is that when you actually talk about, national average home prices having fallen, that's the average selling price. And what we can see is that a lot of higher priced homes have been taken out of the market. So the price behavior in terms of the average unit of a house in Canada is actually still rising in year-over-year terms. It's what's really happened is in response to the policy actions that have caused a cooling in Vancouver and Toronto, two of the biggest markets. What you've done is you've taken a lot of high-priced houses out of the market, and that's bringing down the average sale price.
Well, it's great to have your perspective as always, Craig. Thanks for this.
Thanks, Peter.
Craig Alexanders is Senior Vice President and Chief Economist of the Conference Board of Canada. For more on what the housing market looks like on the Lower Mainland, Steve Saretsky is a realtor with Sutton West Coast and blogger for Van City Condo Guide. Just quickly on the Korea numbers, does that picture that's being painted by the Korea numbers out today, does that jibe with what you're seeing on the ground in Vancouver?
Yeah, I think it's pretty similar. I mean, you really have like a tale of two different markets. You have the detached market, and then you have the condo market. And I would say that, to be honest, they're acting in very different ways. I think a lot of the slowdown that we're seeing in some of the numbers is driven from the detached number. Sales falling off quite a bit there. If you look at the luxury homes, that's really cooled off. I think that's obviously partly maybe to do with the foreign buyers tax or capital controls in China. But we're seeing much of the slowdown at homes priced above $3 million. Sales are down 27%, inventory is up 24%, and then condo prices are still increasing month over month. So it's two very different markets right now.
It's funny because the narrative we hear from out here is that Vancouver is kind of 6-7 months ahead of us in this cycle of policy levers trying to cool the market actually cooling. And we're hearing that there is that rebound, that things are coming back. But it sounds like it's only coming back in some areas for the moment.
Yeah, like we definitely went through, similar to Toronto, went through sort of a psychological shock with, for about 4 to 6 months in the Vancouver market. Detached prices started to pick up, activity started to pick up in the spring, and then basically over the last couple months it's tailed off again and it's basically leveled out. So if you look at it really from like a year-over-year perspective, there hasn't really been any price growth at all in the detached market. Then again, condos are still growing month over month. So yeah, it's definitely very interesting to watch.
So having navigated those last 6-7 months, what advice do you have for people in Ontario that have that bit of a lag? Whether you're a buyer or a seller, what's your advice to them now?
Yeah, I think there was very different perspectives on it. I mean, obviously, some people thought when we had this cool down that it was a good time to jump in. I mean, it certainly looked that way in hindsight, but it's really hard to predict where markets can go. I think that looking at Toronto, I mean, I'm speaking a lot with some of the realtors over there that are following the numbers. I think a little bit of a key difference was here in Vancouver, we never really had a surge of new listings when that foreign buyers tax came in. Sellers basically held out, and it sort of suppressed a lot of inventory, where I see Toronto, from what I can see and from what I've been told, is their inventory is climbing and their new listings are climbing as well.
Walk me out through sort of September, October. Traditionally, you begin to see a little bit more listing activity in the fall. What do you expect to see in Vancouver over the course of the fall?
I think the condo market's going to remain strong, and that's just primarily due to extremely low inventory levels. I mean, when you've had this much demand over the last couple of years, it's basically purged all the inventory. So it's going to take some time for that to sort of get replenished. So I expect that we'll still see a lot of multiple offers and a ton of competitiveness in the condo market. I think as for the detached market, I think I would see that it probably continues a slower pace. It's a bit of a cool down. In certain regions, it really depends in each area, what that marginal buyer can afford really, and if as soon as you get to that higher end stuff, then it really starts to slow down. So I can tell you, like in Vancouver, it's really like anything over $2 million really starts to slow down, and under that, I mean, you can still potentially see some multiple offers.
All right, Steve, we'll have to leave it there. Thanks for this, though.
No worries, thank you.
Steve Saretsky is a realtor with Sutton West Coast and a blogger for the Van City Condo Guide.